Hey everyone, John Henry here, and today in the market psychology video, we're going to be talking about crude oil in a full range. We don't get many of these on crude oil. This is usually reserved for things like the bonds and the S&P, but crude oil today forming a very strong full range. Now, what do I mean by a full range? I mean that pretty much every candle, even, not just the high of day, the low of day, the last swing high, the last swing low, those are also getting faded, but you're also seeing pretty much every candle get faded as well. Now, that's very indicative of a strong range type sentiment, and that means that we need to be buying low and selling high. But along with that, we can do it even a little bit more aggressively. If you have a big, strong bear candle, you could even buy the close of that candle knowing that it's very unlikely going to work, especially on this type of range type day. Now, it's kind of interesting the way that this set up because the last candle that we had on Monday was this massive bull candle that just sort of came out of nowhere. Now, Monday was also pretty much a range day, not as strong, but you can definitely see it was a range day. And they ended the day with that massive spike higher, only to gap lower and start trying to push down. The buyers try to push back up to get that gap closed, but they weren't able to do a whole lot before you start seeing it push right back down. And that's where you start gaining confidence of, you know what? This is probably going to be a range. And then they hold a double bottom. And then on top of that, it starts buying underneath it and you start seeing failures above candles. Everything is saying, you know what, this might be a little bit more than just a range. We're seeing a full range type sentiment where we're getting buyers and sellers basically fading every single move. So if you're a little more aggressive, you can use these to your advantage and try to buy against a bear trend move and sell against a strong bull trend move. So that's why we have a buy right here. Essentially, you're buying underneath the lows, knowing that it's probably not going to work. The breakout is very likely going to fail, and the market will probably pop back higher. Nice for a quick little scalp, and then they slam lower. Now, hopefully I don't have to, explain the next green arrow here because we just got done talking about it, but a huge breakout move. What do we think is going to happen? Are they going to break out and form a brand new downtrend? No, probably not, right? Very unlikely that you're going to see that bearish continuation, so we're going to be buying against it. Beautiful buy against that move, likely going back up towards where the bears at least tried, maybe even back towards the high of day. So a nice buy right there to try to get the move going higher, and it even gave you a secondary shot at trying to get in the move to go back up, kind of an AB equals CD type pattern to get in for another buy back towards the middle of the range, maybe to the highs of the range. So two back-to-back beautiful buys right there after fading the lows earlier. We start pushing up towards the highs and we start seeing those sellers coming back in around where those bears started getting hit. Now, in terms of, where should you get in? Yeah, you could just sell right there given the day type because it's such a strong range, but it's usually better to wait for just a little more confirmation so that we know that the sellers do actually want to come in and that you could have even sold that next attempt higher because that, again, is probably going to fail. But when you see them push down, the buyers try super, super weak, all of the wick on the top of the candle. When they finally get the move to try to get going, it immediately turns around into bearishness. That is a big clue that we're probably going through the bottom. And now we're at the lows. Are we going to stay down here or are we going to bounce? Well, we're probably going to bounce. They may be able to break it out given how strong of a move this was, but you're still assuming that there are going to be buyers underneath that low. That's the one thing that I love about range days and why they're my favorite. They're super predictable, and once you know how to trade them using both market psychology and technical analysis, it's some of the easiest trading days you can get your hands on. So that's going to do it for this one. Hopefully you found it useful. Hopefully you found it interesting, and we'll see you next time.